So when you think about companies that are just, well, part of the fabric of daily life, Odakyu Group really comes to mind for a lot of people in Tokyo and Kanagawa.
Absolutely. I mean, they're heading towards the 100th anniversary of the Shinjuku Odawara line in 2027. That's quite a history.
It really is. And you feel that connection in the sheer numbers serving something like 2 million passengers every single day.
Yeah, it adds up to, what, 700 million a year? It's staggering. It shows how deeply embedded they are in those communities.
Exactly. So that's why we wanted to do this deep dive using their 2024 integrated report to really understand what they're about.
Right. Our mission here for you, the learner, is to get under the hood, look at their businesses, their financials, where they're headed.
Without drowning you in every single detail, of course. We're pulling from their guiding principles, the financial summaries, management discussion, sustainability stuff.
To give you the key insights. Okay, so let's start with the structure. They've rejigged things a bit for FY 2024.
Yeah, the report lays out these core areas. You've got transportation, which is, their historical backbone.
Then there's real estate, and this seems to have become a huge pillar for their earnings now.
Right. And life services that covers department stores, shops, restaurants, hotels, kind of the daily life and tourism side.
And don't forget the digital initiatives, which they seem keen to grow.
Okay, let's break down transportation first. It's more than just the main Odakyu electric railway lines, isn't it?
Yeah. You've got the Odakyu Hakone line, which is beautiful, and the Enoshima Electric Railway too, the Inuden.
Ah, the Inuden, right. Plus there are buses, local routes, express buses, covering a lot of ground in Tokyo and Kanagawa.
And the Hakone tourism transport is a big part of it too. The boats on Lake Ashi, the ropeways, even taxis.
Yeah, if you've been a tourist there, you've likely used Odakyu services. The report mentions some specific things from FY 2023. Timetable changes for Limited Express.
Right, tied to installing new platform doors,
Yeah.
safety focused there. And they've been upgrading the 3000 series commuter trains.
What kind of upgrades?
More space for wheelchairs, strollers, that kind of thing. Plus environmental improvements. It has accessibility and sustainability.
Good stuff. And contactless payments on the Inuden line.
Hmm.
That feels overdue, but very welcome.
Definitely modernizing the experience. And they did that Mokurango train too, promoting child-friendly travel.
Ah, nice touch. And more platform doors at places like Machida and Hantsugi, seismic work, security cameras.
It all points to that safety and security priority. Oh, and they started rolling out EV buses in some of their fleets. Odakyu bus, Inuden bus.
And Tachikawa bus too, which naturally came with some fare adjustments.
Yeah, necessary changes. Okay, shifting gears to real estate. You said it's a primary earnings pillar.
That's what the report emphasizes, and they're putting serious capital into it. The big one is the Shinjuku Westgate project.
Right, that partnership with Tokyo Metro and Tokiland, huge undertaking.
Massive. They mentioned an investment around 130 billion yen. Demolition's happening now, aiming for completion in FY 2029.
That's going to transform that part of Shinjuku, but it's not just Shinjuku, is it?
No. They're doing development around other key stations too. Shimokitazawa, Ebina.
Ebina's interesting. Vinawalk has been there a while, right? Since 2002.
Yeah, and they talk about this vision for Ebina, creating a whole community. Facilities for work, residents, commerce, education, recreation, and wellness.
It seems very holistic, like they're not just building stuff, but trying to shape the whole area.
Exactly. And they've got eyes on updating other places like Shinyurigaoka and Machida down the line.
So continuous investment along their lines, and they mentioned asset rotation and overseas real estate too.
Yeah, it seems like they're looking to optimize their portfolio and maybe find growth beyond Japan as well.
Okay, and the third pillar, life services. What's the focus there?
It seems to be about providing services that fit people's daily lives along the lines, but also enhancing the tourist spots like Shinjuku and Hakone with hotels and such.
So meeting customer needs, boosting local value, sustainable tourism, that sort of thing.
Right, and addressing social issues. One specific impact mentioned is the Shinjuku Mylord building that's planned for demolition after April 2025 as part of the Westgate project.
Ah, makes sense. It's all connected to that larger redevelopment. Now, what about the digital initiatives? They have a specific income target.
They do. $3 billion in operating income by FY 2030. So it's clearly an area they're serious about growing.
What are some examples?
Well, there's EMOT and Moz Japan. Basically, apps and platforms to connect digitally with customers, integrate travel options.
Okay, streamlining things.
And WOMS, that's their waste management business. They call the division Beyond Waste, and it's expanding nationwide.
Waste management. That's unexpected, but interesting diversification.
Yeah. and Ichi no Ichi, a kind of social media platform for local governments and community groups, plus something called Hunter Bank.
Hunter Bank. What's that?
It matches hunters with communities that have problems with animal damage. Quite specific.
Huh. Innovative. Definitely trying different things. So, pulling back, what's the overarching growth strategy here?
It feels like a shift. They're moving from focusing just on passengers to the entire population along the Odakyu line. That's what, 5.2 million people?
Wow, yeah. So it's about developing the whole regional economy, not just transport.
Exactly. Collaborating with local governments, other players, using all four of those business areas, transport, real estate, digital, life services together.
Synergizing them for regional value. And they
Yeah.
mentioned human capital being key.
Yeah, they highlighted wage increases 5% each of the last 2 years, investing in their people to drive this.
Makes sense. And they've set those targets for FY 2030 or 70 billion operating income, ROE of 7% or more.
Right, return on equity, a key profitability measure, gives a clear sense of ambition.
So the key initiatives all feed into this. Strengthening stations, boosting transport demand through things like child rearing support,
Strategic pricing, that heavy investment in real estate we talked about, especially Shinjuku.
developing along the line, growing those digital businesses, and just generally strengthening the management foundation, including environmental stuff.
They even put sustainability above the main management vision, which is quite a statement.
It really is. But it's not all smooth sailing. What challenges did the report highlight?
Several big ones, as you'd expect. Demographics, the declining birth rate, aging population along their lines, that impacts the workforce and ridership long term.
Labor shortages are a challenge everywhere right now.
Definitely. Natural disasters, obviously a risk in Japan. Rising prices and interest rates affecting costs.
And changes in how people work and travel post-pandemic. Fewer business users.
Exactly. Plus, maintaining public trust risks like cyber attacks, human rights issues, and of course the constant need for safety.
Yeah, those are all pretty significant headwinds. Okay, let's dig into the financials then. How did they actually perform in FY 2023?
Pretty strong, actually. Operating revenue hit for $409.8 billion. That's up 3.7% year on year.
Okay, and they have targets for the next few years.
Yeah, aiming for $424 billion in FY24, then a slight dip maybe in FY25 to $445.5 billion, then back up to $445.3 billion in FY26.
And operating income. That often tells a clearer story about core profitability.
That saw a huge jump in FY 2023, up 90.8% to $50.7 billion.
Wow, nearly doubled. What drove that?
Mostly the post-COVID recovery, basically. More people traveling, hotels doing better, plus the effects of their structural reforms.
But the forecast for the next few years is a bit lower, right? Around 42 to 50 billion.
Yes. Before aiming for that 70 billion target in FY 2030, the dip is linked to those big investments they're making.
Got it. Investing for future growth. What about net income? You mentioned a big sale impacting that.
Right. Net income attributable to owners of parent was $81.5 billion in FY23, up over 100%. But yeah, largely thanks to selling the Odakyu Century building.
So an extraordinary item boosting the bottom line. That explains why the targets for the next few years are lower as those investments kick in.
Exactly. And that flows through to ROE, return on equity. It was a very high 20.3% in FY23 because of that sale.
So that's expected to come down a bit before hopefully climbing back up towards their 7% or more target.
Precisely. They expect it to dip temporarily in FY25 as net assets increase from investments, but then gradually rise with profit growth. The goal is consistently keeping ROE above their cost of equity, which they figure is around 5.5%.
That makes sense. And how's their debt situation?
Looking better. Interest-bearing debt was down to $626.9 billion in FY23. That's below the $700 billion recovery target they'd set.
Good progress. And the debt to EBITDA ratio?
Also improved, down to 6.5 times. Again, better than their target of 7 times. EBITDA itself was $96.6 billion for the year.
Yeah.
So deleveraging achieved. And they're aiming for around 7 times that ratio by 2030.
Seems manageable. And looking at cash flow, free cash flow is projected to get quite healthy.
Yeah, they expect it to top $120 billion by FY 2030, especially after the Shinjuku project costs are done. That gives them a lot of flexibility.
So summarizing the performance drivers, structural reforms, efficiency, cost cuts via digital tools, pricing reviews.
The big post-COVID demand recovery and those asset sale gains, a combination of factors.
Okay. Now, critically for investors listening, plans to create shareholder value. What's the story there?
They emphasize balancing financial health with capital costs, and yeah, strengthening shareholder returns is stated as a key focus.
Any specifics? Dividends.
Dividends are up. They paid 30.0 per share for FY 2023. That's a nice bump from 21.0 the year before.
And compared to further back.
Well, back in FY 2013, it was 8.0. So a pretty significant upward trend over the decade, although obviously some fluctuations.
That's a positive signal. What about share buybacks? Did the report mention future plans?
It didn't lay out specific buyback plans for the future, no. But, I mean, with the focus on boosting ROE and shareholder returns overall, you'd think it's potentially on the table.
A tool in the toolbox, maybe?
Mm-hmm.
What other strategies are they using to increase value?
They talked about improving ROA return on assets by growing profits and managing assets efficiently. They've even set ROA targets for different business segments.
Okay, focusing on asset efficiency.
Right. Also using leverage, smartly borrowing, bonds, while keeping the shareholders' equity ratio around 30%, controlling the cost of equity through better investor relations.
Makes sense. And being tougher on new investments.
Yeah, stricter criteria. And being willing to sell off assets that aren't hitting those ROA targets. Plus, that expected rise in operating cash flow gives them more firepower for returns later.
So, putting it all together, how do we assess the business moving forward? What's the outlook?
Well, that update Odakyu vision,
Right.
the community-based value creation company, seems central. It's about sustainable growth, leveraging transport and real estate, but really focusing on the whole region.
And we need to factor in that expected dip in operating income for the next few years.
Absolutely. They're being upfront about that it's due to those big investments, roughly $400 billion each for facility updates and environmental stuff. It's a long-term play.
Investing today for returns tomorrow. Seems logical.
Yeah. And they sound confident that operating income will grow significantly towards FY 2030, especially once Shinjuku Westgate is finished, and these investments bear fruit.
Plus, the sustainability push is strong. 50% CO2 cut by 2030, net zero by 2050, 100% renewable energy for trains starting April 2024.
Right, that's becoming table stakes, but their commitment seems deep, and underlying it all is that constant refrain of safety and peace of mind.
So the aim is to be this trusted, long-term player, balancing growth, community needs, and shareholder returns.
That's the picture they paint. Doing this deep dive, a few things really stand out for me. The sheer scale of that Shinjuku project is one.
Definitely. And the integrated approach in places like Ebina, it's more than just development, it's community building.
Right, and those ambitious sustainability goals alongside the financial targets, it's quite a balancing act.
It really is, and it brings up that point about integrating the physical and the digital, which Odakyu seems focused on. It makes you wonder, doesn't it? Well, how this convergence physical infrastructure like railways and real estate, blended with digital platforms and services, how might that actually reshape urban life, how we live, how we move around?
Huh. That's a really interesting final thought for people to chew on. A company like Odakyu with such deep roots, adapting to this rapidly changing world. What does that mean for the future of our cities?
Exactly. It shows why digging into these reports, understanding these complex strategies is so valuable. You start seeing the bigger picture.